We've had a great end to a great big week on the markets. We had today, we had the PCE data out, which is the inflation data that the Fed look at, and it came in exactly as expected. And the result is that right now we're looking at the markets and the markets are strong. Bitcoin is above 23,000. If you look at the S&P, above 4,000, in fact, 4,079, and I think well through the little trend line. And it seems that the week's ended off pretty well. Next week is another big week because next week we've got Powell coming out after the FOMC meeting and talking about interest rate increases. And we're expecting that Powell's going to increase interest rates by 25 basis points for the first time. So the big question is, the question that all of you are asking, should you be deploying capital now? I know we've all got PTSD. I know we're all scared because we've just been through a huge bear market. But is this the time to be deploying capital, or is this the time to be taking capital off the table? That's what we're going to be talking about today on our big banter. It's going to be huge. It's going to be fun. I've got a new guest, a new member of the Banter fam with us. Let's do this, guys. Let's do this.
Get the fuck out of bed, bitch. Go. Get up, and then they got go. Time to wake up, bitch, get up. Get up, get up.
Wakey, rise and shine. I know it hasn't been a great market action full down the markets, but it's been a great week on the markets. We've had amazing pumps. We got Phantom up 56.5%. We got Aptos up 120%. We got Bitcoin above 23,000. We got great information this week, great data this week on the markets, which is pointing to the fact that maybe this inflation problem is over and maybe we're moving to the next step in the cycle. And as I said before, I think the big question in everybody's mind is whether we should be deploying capital now, whether we've seen the worst, and whether this is a safe time to be putting capital in the market, or whether we should all be careful and maybe there is another bottom coming up, which is what some investors are saying. That's what we're going to be talking about today. And as you know, Fridays, big shows on Banter. It's our Banter Fridays. We've got amazing guests. Just before we bring the guests in, I just want to remind you that our Banter Fridays are brought to you by the crypto VPN, NordVPN. And as I said to you guys before, support NordVPN because they support us and they also help you surf the web anonymously. And when you're interacting with exchanges and DeFi applications, you want to make sure you're anonymous. You want to make sure that you're away from the hackers and that no one knows where you guys actually are. And if you want to support them because they support us, they have a special deal for you guys, less than $4 a month. In fact, $3.35 a month. Support them. Let's do this. Let's do this. Let's do this. As I said, I've got some great guests for us today, including none other than Patrick Bet-David. Patrick, welcome, my friend.
It's great to be on with you. I love the intro, by the way.
You know, we always worry when we bring guests on and we play the intro because, you know, some people just don't get it. But I saw your head and I saw your smile and I saw you moving with the music and I said, you know what? He's actually one of us. He's actually one of us.
Yeah, I love that. I don't know who that guy is, but I love that video.
Pat, you're new to the Banter fam. It's the first time we've had you on Banter, and I don't think you have been on many crypto shows. I think a good place to start is to ask you about your views on crypto before we bring in the other guests, just to kind of lay the foundations for today's talk or for today's podcast. I want to just look at I think I got two tweets somewhere where you said you haven't really been very involved in crypto. You haven't been against crypto, but you haven't been very involved in crypto. Maybe just give us some background about how you feel about crypto and whether you're invested.
Yeah, so to me, when I think about crypto, I see Bitcoin obviously as the gold standard. That's the one where it makes sense to somebody logically, mathematically. It makes sense to follow what Bitcoin is doing. Ethereum at one point made sense as well because of their story is a different story they're telling with the links to NFTs. Although I'm not an NFT guy, I think a lot of people made a lot of money on NFTs. It was the typical get rich quick. It attracted that audience on the NFT side. Now, that doesn't mean the technology is not going to be around. That doesn't mean blockchain is not going to be around. That doesn't mean investing in the technology of blockchain is not going to be around. That's the future of what we're going to be doing. So some of those stocks I do support. I'm 0.5% of my portfolio in crypto, specifically Bitcoin and Ethereum. I would say probably 70% is Bitcoin, 30% is Ethereum, and I am not a big fan of 99% of NFTs.
Well, you sound very much like Scaramucci sounded many months ago, when he used to say that a very small part of his portfolio was in crypto, and then he kind of went all in on crypto. Mooch, welcome, buddy.
I'm all in on crypto, and I kept my hair, which I'm very happy about, okay? Because the stress level of you people, I thought I would have aged 25 years and lost every follicle on the top of my head. But here I am, still here.
Yeah, you're still here.
I am all in on crypto. And by the way, I'm almost out on the Sam Bankman-Fried thing, too. I mean, we're going to get those shares back hopefully shortly. So
I was about to ask, you're still all in on crypto. You went through, we should call it a baptism of fire, and you probably went through quite a bad run with SBF and FTX investing in your company. Also being a big holder and a very high profile holder of crypto in the institutional world. You were picked on by the press. You're still getting picked on by the press. How's it going since then? Have you managed to get your shares back? Walk us through what's going on.
Well, no, we haven't got the shares back yet, but I'm very optimistic about it. I mean, we are in the process of negotiating, and so we'll get our shares back. I mean, the good news is there were no economic preferential treatment to the FTX situation, so there's really nobody that's going to have an interest in those shares other than us. So that's good news. But Patrick it's interesting because Patrick is probably where I was 2 years ago. And I'm probably a year and a half behind Mark Yusko because Mark, I credit you, and I've said this before on Crypto Banter, with helping me get in this space because I have such respect for you. And I remember when you entered the space, I said, okay, I got to get myself up to speed on this. And I've gotten my ass kicked. I've gotten my living ass kicked. I mean, let's just be honest about it. If a monkey, I'm just going to talk very openly. If a monkey was flipping coins last year, they would have done a better job than our decision making. How's that for? So
I want to talk about that for a sec. Mooch, I want to talk about that for a
we
sec.
just did everything that you could possibly think of wrong. And I thought they were all good decisions. So I'm happy to take you through every one of them, but that's what happened to us.
So you're just the babe, Mooch. So
say that again more.
No, you're like Babe Ruth. So Babe Ruth is doing his press conference years ago, and he's got his drink in his hand, and the guy says, "Babe, how you feeling? Right? You struck out 4 times." He's like, "Oh, it's awesome." And people are like, "Well, what are you talking about? You struck out 4 times. Like, I'm that much closer to the next home run."
Yeah, it's a good point. It's like that. It's like that adage that Reagan used to talk about with the young boy in there shoveling all the pony dung. And like, what the hell are you doing? With this mound of dung, there's got to be a pony in here somewhere, So yes, we have to stay eternally optimistic. I'm obviously super bullish. I love our portfolio. I just added personal money to the Skybridge Series G, which was down a lot this past year. And I'm going to add money every single month because I believe in what we're doing. But I'm going to tell you, when I made the decision to accept the money from Sam, I thought it was a brilliant strategic decision. I thought I was teaming up with the second largest cryptocurrency exchange, 12.5% of the market share of the trading. And I think I said this to you, Nan, somewhere where over the weekend, when the buzzing was happening over CoinDesk and CZ was hitting him with a bag of FTT tokens, I logged into your live stream, and you may or may not remember this, but you were buying FTT at 22, and then you put a stop loss in like slightly below there. And I was like, all right, that's sort of what I think. I don't think this thing is going to break down. I didn't see the house of cards tumbling. So I want to say this to your listeners. Okay. I want people to think about this. I'd love to have Patrick and Mark react to this and yourself. It's not the things that we worry about that get us in trouble. I know Bitcoin's a high vol asset. I know that I've got trades on that could not work for me. But it's the things that I think with absolute certainty that I'm correct about that get me in trouble, okay? I thought Sam was money good. Now you guys can excoriate me now. We like to blame victims of the fraud, and I get all that. But I thought he was money good, and that was more trouble than a 100 vol asset or an 80 vol asset like Bitcoin. Anyway, I'm off my soapbox. Thank you guys for having me.
Patrick, I'm very interested to know, as an outsider, like I said, an outsider to the industry, not as deep in as everybody else. You were watching the FTX collapse. What were you thinking?
You know, it's not like it's one and it's only Scaramucci. It's a bunch of people that were in it. On paper, everything looked good in every possible way. Even the guys who are enemies of it are saying, yeah, that's a good investment to be a part of. I think for me, it's the following. I know what I know. And I know to try to be an expert in 5 different things, it's mathematically impossible. So there is a risk when you go into a new space, and you could get lucky. The luck factor is, you know, hey, let me tell you, Roger Ver bought 200,000 Bitcoins at $1 and he sold it to Michael Saylor at 32,000. Oh, you can have these types of conversations and the stories of people that got lucky. But, you know, if you do go 100% in, like Scaramucci is talking about, where I feel like I'm on a podcast right now where it's baptism. You guys are trying to baptize me into the Bitcoin space and in the name of whoever the folks are to get baptized in this community. No, but from an outsider, I saw this happen in real estate. Guys who went all in and they said, I'm going 100% real estate. A couple guys became billionaires. But also some people were 3 years off, and those guys that went in should have been billionaires or worth 20 million bucks. This game of investing is ugly. You can get in the ring and get knocked out and be on the cover of Sports Illustrated for getting knocked out. It's not easy. It's scary. It's not for everybody. This is why most people don't want to get in the ring. So the fact that folks are getting in the ring, number one, I tip my hat off to you. You know, I respect you doing that, because you can get knocked out. Many of us do. If you have money, and real money, I'm not talking about like, I'm talking if you have real money, you probably have real money because you got knocked out a few different times, and it's happening to a lot of people today. But the name of the game is those who are long-term thinkers, they're going to redeem themselves, and the stories are going to flip in 2 years and talk about the person who was who had no clue what he was doing. He is now the expert. Everybody wants to have him on. Oh, look at him. He was right all along. This game is a long game. You got to be patient. They're going to take shots at you. They're going to build you up. You're going to be hero. You're going to be zero the next day, but you got to be patient.
Yeah.
You know, I must say, Patrick, I know your background is in hard work and grind and building businesses, and I know that's kind of what you preach a lot. This industry is a very strange industry, and the reason why it's such a strange industry is because you got a whole lot of millionaires, 100 millionaires, multi-billionaires that didn't do anything except speculate very, very early on magic video game money. And so, you know, I remember when I got into this industry in 2016, 2015, and I started to meet the big guys in the industry. And I came from a very traditional business background where, you know, I built a business with 1,500 staff and multiple offices, and it was a grind. And then I walked into an industry where there were multi-billionaires flying around in private jets. And the only thing that they'd ever accomplished or achieved in their lives was they bought magic internet digital currency at $1 when it was $1, and they held it until it was at the time $3,000, $4,000, $5,000. And so it's a very, very strange industry to be in, because it's an industry that rewards speculators very, very well. Also, it's an industry which gives you a consistent scoreboard of how well you're doing. You know, there's not many industries in the world that give you a consistent scoreboard for how well you're doing. And I think that it attracts a whole lot of what I call retard degens who love dopamine rushes, because what it does is it gives them a feedback loop. So the feedback loop is, I think that the AI narrative is going to work. So I put a little bit of money in AI, the price goes up, I get the feedback, I think I'm a genius. And it constantly gives you this feedback loop. And there's no other industry in the world that does that 24/7, 365. It makes you feel like a hero, and it makes you feel, you know, it gives that constant rush. And that's, you know, I see now in the chat, people are saying, that's me, that's me, that's me. That's all of us. You think you're a genius because it's that constant feedback loop. Anyway, let's get on with the show. Guys, if you are watching at home and you like this content, smash the subscribe button, smash the like button. Let's get the numbers up. Remember, if we do get to 2,000 likes, the Rolex goes today. If not, well, we give it away again tomorrow. I'm going to talk about broader markets. We've had an amazing week on the broader markets, or at least I think it's been an amazing week. We had, let's start off with the PCE numbers today, showing that inflation is actually coming down quite aggressively. I made a chart around CPI, and I want to maybe just call up that chart quickly. This was the chart around CPI. If you look at the last 6 months of CPI data, it's at 0.9%. Annualize that, add a little bit of spice, you got yourself a 2% inflation rate, which is what Powell's talking about. Today we had the PCE numbers. They came out today exactly as expected, 4.4% year on year versus the expected on the core numbers. Does it feel like this inflation problem is now behind us, or do you guys think that we're going to get some kind of surprise? And if the inflation problem is now behind us, does that mean that we've seen the end, or we're nearing the end of the interest rate hike cycle? Let's start off with Mark. Mark, you haven't.
Yeah, I mean, a couple of things. So one, I don't think we have an inflation problem. I think it's a semantics problem. Inflation is caused by excess demand and limited supply of goods and services. That's not what we had. We had plain old, good old fashioned currency devaluation. The Fed doubled the money supply in 2020 and 2021. So an 18-month period. Look, we've been a republic for 247 years. It's a long time. 247 years. Half of all the dollars in the history of the republic were created in 18 months. And that causes stress. And so in the last 12 months, Jerome, right? It's funny, when Jerome came into power, when he became the head of the Fed, he was Jerome, right? Buttoned up, suit and tie, the hawk, right? And he was going to raise rates. And the Trumpster just bashed him. I mean, just no, you are Jay, the dove. And then 2020 happened, and he became the letter J, the pusher. Like he was handing out stimmy checks at the corner of Broad and Wall like they were going out of style. I mean, he was wearing the hoodie, forget the suit and tie. He was the pusher. And then last year, somehow he shed all that and went back to being buttoned up Jerome. And he has been cranking up the heat on interest rate hikes. And everybody's like, oh, look, inflation's coming down. Because bullshit. Inflation, the CPI number is coming down because oil prices went down, because Biden drained the SPR, and because used car prices went down, because we actually can get chips again. It has nothing, zero, to do with the Fed. The Fed didn't create the inflation. They didn't create the disinflation. It has nothing to do with Jerome. So this whole nonsense about, oh, if we can get a good CPI print, then the market's going to moon. Bullshit. Look, the Fed going from 75 to 50 basis points is not a pivot, right? Oh, he pivoted. No, he's still raising rates. He's still limiting liquidity. He's still tightening monetary conditions. And the market's calling bullshit, right? The market is pricing in cuts this year. I think they're going to be sorely disappointed because he is back to doing what he thinks is his job, which is short-term interest rates for 200 years have roughly equaled nominal GDP growth. Nominal GDP growth is probably around 4%, and short-term rates need to stay at 4%. They're not going back to zero. They're not. And so everyone thinks, well, we're going to get this big boom in the market. Well, has anyone seen earnings lately? They're not good. Why are they not good?
But that's expected because, I mean, I guess when you raise interest rates, you slow down the economy, you make it harder for companies to perform. You want to try and increase unemployment because you're balancing, or the Fed is balancing interest rates and unemployment. So that's kind of what they're doing. And the result of that is that you get a reported earnings coming down with a lag effect. And that's usually what puts us into recession. But for me, the word recession that everybody's using, number one, I think we're very far from recession. And what I base my data on is that the GDP numbers at 2.9% GDP growth. That's not a recession. That's nowhere near a recession.
No, it is.
And
it is. Ren. No, absolutely not. Okay, first of all, that 2.9% is meaningless. Q3 and Q4 GDP are totally meaningless numbers because 3/4 of it is the release of the SPR. We're double counting the oil again. So that's the first thing. The second thing is the year-over-year change in GDP was 1%. 1% is a recession. Full on, that is a recession. It's the same as 2001. And we're reliving 2000 and 2002. Last year was 2001. I think this year will be 2002. And all the fraud's going to bubble up to the top. All the cooking of the books in corporate America is going to bubble to the top. And I don't know that we'll have an Enron. Everybody's like, oh, FTX is Enron. No. It's so small relative to what Enron was and WorldCom. And anyway.
Mooch, what do you think? Have we seen the end of the inflation problem? And have we seen the end of the interest rate hikes? I mean, the market's forecasting 2 more interest rate hikes, both of them 25 basis points. That's what's left for this year. What do you think?
I want to go a little further on that analogy because I want to understand it better. But here's what I would say, and this is my view, and I could be totally wrong. I don't see how they wait for inflation to go back to 2%. You look at the debt level and you look at the interest rates. Let's just go over this for everybody. 38% of the national debt is rolling in the next 2 years. So let's say 40%, just to round it off. You see the debt clock. Let's call it 30 trillion, just for simple mathematics. That's $12 trillion of debt. That's picking up 200 to 250 basis points of interest rate expenses. Okay. So let's do the math together. That's $240 million, billion dollars of additional interest rate. Meant to say billion. You get them all confused. I think that's one of the problems, Mark. These congressmen really don't know the difference between trillion, billion, and million. So that's why.
Oh, no, they can't do math. And Mooch, you're exactly right. I mean, we throw the trillion number around like it's nothing, right? We would have to sit here together for 31,710 years, which I promise would actually be most unpleasant, and spend $1 a second for 31,710 years. That's 1 trillion.
Right.
It's a ginormous number.
But Mark, here's the thing. So you can't, there's no Fed person looking at that and saying, okay, no problem. Let me jack rates another 300 basis points because I don't like this last inflation print. And Barry Sternlicht said it the other day, Volcker didn't have a $32 trillion debt balance sheet. So I don't know what these guys are thinking. You're going to have a $1 trillion interest expense on the federal budget. How are you going to do that, guys? You're not going to be able to do that. You're going to monetize the debt, whether you like it or not. They're going to bring the rates down. It's going to pop the market. That's what I think.
And that's totally fair. That's totally fair. I mean, the problem with the debt is the service, right? We got to a low of 1.6% of GDP going on interest. We've never had higher than 3.2 ever. And we're starting to approach 3.2%. We can't exceed that, right? Now, the problem is the cult of Kelton. Stephanie Kelton, freaking crazy person. And the people that listen to her are even more stupid. She's convinced people of this nonsense that the government that has the world reserve currency and can print as much money as they want with no ill effect. If that were true, wouldn't every country just do it? Well, Mark, every country doesn't have the world reserve currency. Doesn't matter. If it were true that you could create wealth by printing money, everyone would do it. And so you can't. Wealth comes from work, productivity, innovation, like creation, right? Building businesses. It does not come from printing money. And so all these people that listen to this crazy woman aren't looking at the numbers. And I tweet it out all the time, #math is hard. Math is hard when you start getting to these levels of numbers. But they believe you can put $1 trillion deficit and just ignore it like it's not there. But it's there. I don't know.
Let me pass this to Patrick. Patrick, what do you think? You've been watching the inflation problem. Do you think that we've reached the end of this cycle? Do you think that Powell's achieved a soft landing? I mean, I know it's not popular opinion, but it hasn't been.
But let's just say we are at the end of the cycle. So let's ask that question. Okay, let's just say we are. So in bodybuilding, when a bodybuilder does steroids, so the body stops producing testosterone, right? And the body gets let's just, you can take your levels from 400 to 1,200, like you were 18 years old, and look at the muscles I'm building, look how cut up I am, I'm taking all these steroids. Your body stops producing naturally. So when we went on a 128-month economic expansion, or 129 months, oh my God, look how much money we're making. This is the first time we have all these people worth $100 billion. Look at the kind of wealth that's being created. This is amazing. You know, all this fake success. A lot of people had a lot of fake success. And then, boom, people got exposed. Boom. 50% that Mark was talking about in 18 months, which is insane. Oh, this is going to help low and middle income family. Low and middle income family would have money if they knew how to save. So the money rolled up to the rich. The rich got richer. So the same people that wanted to help the poor and low and middle income, they hurt them. They made the rich richer. And that's a left-leaning policy, by the way. That's not a conservative policy. But the reality is both of them spend the money. Trump was worried whether he's going to get reelected. So let's spend the money ourselves. Then you know, Biden does the $1.9 trillion on March of 2021. And the next month, everybody's bragging about the fact that, did you see what happened with the savings rate in America at 27%? It's unbelievable. The American people are saving money. This is the model. But then look at the numbers today. Last month's savings rate is 2.4%, lowest in 17 years. Who's paying the price? The rich got richer. The money's with them. Yeah, of course, you know, sometimes you have money in the market and that can fluctuate, but you still own the same amount of shares if you didn't sell. If you're playing the long game, it's going to recover. We know how the economy works. We know how the market works. If you don't sell, if you sell, you took a loss. If you don't sell, you still have the wealth. It's just the prices kind of changed. But the low and middle income took a massive, massive hit. So now here's the one thing nobody's talking about. I'm having dinner with David Solomon a month ago in Miami. And we're at this dinner, we're sitting there and everyone's asking all the questions. And then I said, David, there's one thing nobody's talking about. What's that? Everyone's trying to solve this, you know, inflation number because Powell, we're going to keep raising rates until we hit 2% and, you know, bragging about it. And we know Powell is a guy that used to work at Rubenstein for 7 years. So it's not like he's not coming from the private side. He's been on the private side. He understands the private side. And he went to work, you know, for the government, taking Yellen's job. And, you know, he came in, he's on both sides, left and right. So politically, you can't put him on one side. He's just more a guy that's probably center. But I say everybody's talking about interest rates and everybody's talking about inflation. No one's talking about unemployment. I mean, if you're going to keep these rates going like this, what's going to happen Q3 of 2023? Well, we're estimating that unemployment could go, you know, around 4.5 to 5%. We don't know yet. We're seeing what's going on in, the technology sector. We saw what Goldman Sachs came out in the article talking about 4 markets that are going to hit real estate, that are going to lose more than 25%. San Diego, San Jose, Austin, and you have Phoenix. And what do those 4 things have in common? San Jose, tech. Austin, tech. You got Phoenix, semi-tech. The only one that's not tech is San Diego. San Diego's got a different kind of a sector they're dealing with. We're expecting these 4 markets in real estate to dip 25%. So, okay, where is this going? We're going to get more layoffs. We're seeing Amazon. We're seeing Google. We're seeing all these Microsoft. Here's how they sent the email to. Now we're seeing Redfin. Now we're seeing Spotify. Now we're seeing all these other guys. We don't yet know what's going to really be happening. So we can sit there and be very optimistic this year. It's not recession. It's really 2.9% or 2.4%. And the market saying, no, it's really 1%. If you take the oil out, which our reserves kind of depleted, it's probably the worst time ever to be an expert. Okay. It's probably the worst time ever to act like you know what's going to happen because none of us know what's going to be happening. So the question you asked at the beginning where you said, today we want to talk about, is it the time to buy? Is it a time to get back into the market? Is it a time to deploy some of your money? I think you could do that and come out looking smart a year and a half from now. And you can do that, look like an idiot 6 months from now. But we ought to do that. I mean, the reality of it is unless you can predict the future, we have to kind of go back to the same old boring philosophy of dollar cost averaging. If you're going to go in, whatever the amount is, maybe start 5-10%, 5-10%, 5-10%, 5-10% gradually without assuming that we all know what's going to be happening. Because the reality of it is when you look at all these numbers that we're all talking about, no one for a fact knows what's going to happen because you don't control the pen. Powell does. We don't know regulation with what they're going to be doing at the top of the U.S. government. And then we're hearing what Jamie Dimon is talking about the other day when he's being asked about Bitcoin and say, well, you know, you just can't trust it. And, you know, what if, what about Bitcoin? There's only a limited amount. You know how many coins there's? Yeah, but you can't, you know. And so eventually they don't have an answer. So maybe they want to create their own coin. to kind of screw it up for the people that are in because they feel bad that they didn't get in to make the 3,000 times that some average people that made a couple $1 billion. You know, billionaires who are billionaires don't want to see other billionaires who became billionaires because they got lucky. Some billionaires that are billionaires want to be billionaires because they're smarter than you. They don't like lucky billionaires. They don't like accidental billionaires because you are not as smart as I am. I don't know if you know what I'm talking about or not. So it's a very, very weird time. I think it's probably a time to still be a little bit paranoid, but you could make a mistake if you don't go in.
Mooch, I heard you on another podcast, and you said that the Jamie Dimon talking at the World Economic Forum in Davos around Bitcoin was actually the buy signal for you. Just walk me through your thinking there. Mooch,
Well, listen, I mean, I've been to Davos 16 times. It is the most wonderful contrary indicator in our civilization. So when I was there in 2007, the economy was perfect. We had solved all our monetary policy problems. We were never going to have a recession, and life was good. We had the worst economic crisis in 80 years. In 2009, after the economic crisis started, the world was going to open. All of us were going to fall into the center of the earth. Start of the biggest bull market in U.S. history. 2016, the Davosians said that Hillary Clinton was going to be unanimously elected president of the United States. In 2020, they said, well, Donald Trump, of course, he's going to get reelected president. And so what happens with consensus thinkers, what happens with elitists, frankly, they don't want to embarrass themselves in front of each other. And so it's almost like a match sailing race. They all want to have the same point of view. And they'll look at somebody like me that will take a contrarian view mockingly. And so I said in 2020, Trump's going to lose the election. I got to Davos last week. There was a funeral dirge going on for crypto. All things related to the blockchain, all things related to Bitcoin. Jamie knows better. And I would love to have an opportunity to debate Jamie on this. He knows better. He knows what Bitcoin is. When he's calling it a decentralized Ponzi scheme or a pet rock, I think he's serving the interests of the elites around him. And I think he wants to create a safe haven for himself regulatorily. And I understand all that. But that is a classic sign of a bottom for me, that there's that much negativity in the world of elitism related to blockchain and crypto.
I must say, when I listened to Jamie Dimon, I was super disappointed by him because here's a guy who's running one of the biggest banking organizations in the world. He knows exactly what Bitcoin is. He knows exactly that the 21 million is hard-coded. He knows exactly that you can't change the 21 million, but his argument came out and said, well, what if they decide to mint new coins? I just felt that here's a guy who's in charge of the bank. He needs to know better before he criticizes a financial instrument that has performed so well. And I think even worse is that his bank was one of the first banks to introduce their high net worth private clients to Bitcoin.
Christine Moy was the one that worked on the wallet for him before she went over to Apollo.
Yeah, so I was super disappointed. Yeah, I was super disappointed in the narrative. Mark, I saw you got cut off, so welcome back. And I think this is a good time to play this little, the last time that you came on to Banter. I just want to play this because I think it's worth talking about.
So 2 weeks ago, I do this weekly show on Friday mornings called On the Margin. And 2 weeks ago, I said, I'm pretty sure that winter's ended, but I'm not 100% sure. We need one more higher low. We need a third higher low. But once that happened, absolute certain that winter's over, spring is here. Now, spring can be volatile. Doesn't mean we're going straight up, but winter's over and we're in an accumulation pattern, not a distribution pattern, not a liquidation pattern.
So that was the 8th or the 7th of October. That's when you were here last, 7th of October. That's what you said. I guess we could probably say that that's where we are right now. What do you think, and where do you think we're going from here?
Look, I stand by what I said. June 15th was the end of winter, beginning of spring. What I missed was Hurricane Sam. So I live in North Carolina, and every once in a while, about every 10 years, kind of late March, we get a nor'easter that spins off the coast and it dumps a bunch of snow. It's still spring. It's just snowing. And so, look, we had a nor'easter. We had this Hurricane Sam. Bad people do bad things. And I don't want to go all the way deep into the rabbit hole, but I got one thing to say on that. So Sam Bankman-Fried and Caroline were the masterminds of nothing. Okay? They are not the masterminds. This is way bigger and way more evil than we need to talk about today. But and Howard Marks said it best. He said, the problem in this world is you have to decide between the good people who sound good and the bad people who sound good, because they're only people who sound bad make presentations. And so, I just got lucky, right? I mean, I never met the guy. We probably would have been lured in by his charm. And I feel for Mooch and everyone who was victimized by this guy. The guy's a bad guy. I think there are way worse people above him. But my point is, yes, we had the dip from 18 down to 15 and then back to 18. We made the perfect cup and handle pattern. But spring, interestingly enough, you think about the 4-year cycle, spring is basically flat. I mean, that is a perfect cup and handle. I mean, it doesn't get better than that. Although somebody labeled it a double D, which is not politically correct, but it does have a funny, they made a funny drawing. But the key there is spring
is flat.
Is flat. But there's a lot of volatility. Summer, which I think starts in April, May, usually 9 months ahead of the halving, that's when things are going to get fun. And the reality is Bitcoin was engineered so perfectly. It's really amazing when you think about it. That's why I'm pretty sure Satoshi's not a single person, because I don't think any one person could be this smart. I mean, just think about the halving. The halving guarantees number go up, because what happens on the halving is you have all the miners that are securing the network, and they have a fixed cost of electricity and space and machines. And suddenly the rewards go down in half. A whole bunch would go bankrupt unless the price goes up. The price going up tends to attract attention. Now, I always joke, it's mostly guys, right? Because we're hunter-gatherers and we see motion. I was a funny thing. So my wife says, get the ketchup out of the refrigerator. And I walk the refrigerator, open the refrigerator door, no ketchup. She walks up, grabs the bottle. If it ain't moving, I can't see it. So it's just real. But once the price starts moving, then you go from the investors who buy assets when they're below fair value, to traders who don't give a shit about value, they just want movement, to speculators. And speculators are just the opposite side of hedgers. So you have miners who have to sell Bitcoin. So speculators come in and take the other side. But then you have the degenerate gamblers. And this is where it gets bad. When people enter a market with leverage, that's what causes the stress. And that's what causes the massive volatility. And so today, the network value of the Bitcoin blockchain is somewhere high 20s, 28, 29. So as an investor, I'm buying because the current price is a liar, by the way. Price is not value. The price is below fair value. So I'm a buyer. And then as we get into crypto summer in April, May, then the traders will push that price above fair value. And I'll still buy dollar cost averaging, as Patrick was saying. Most important thing. Don't buy it all at once. You should just, it's funny. I remember being on, and I'll stop talking. I was on CNBC in 2019. And literally, while I was on the show, the price went from 10,000 to 8,000. And Melissa Lee, and this was in 6 minutes. It wasn't like in 6 hours. It was in 6 minutes. And Melissa Lee says, so what should we do? I said, buy it. She said, what? Are you kidding? Well, no, you'd always say that.
I remember this interview so well. I remember this day so well. I must say.
And my point was, buy it today, buy it tomorrow, buy it next week, buy it next month. And here's the thing. I'm not sure. I love Mooch said before, it's the things that we know for certain that just ain't so. That's what kills us. Like when you're sure about something, like doubt is the greatest superpower in the world. If you can stay in a place of doubt and don't think that you know everything, you do much better. But when we're certain of something, and my wife would say that I'm certain of way too much, but I am certain, and I mean this, I am certain of one thing, that blockchain technology is the evolution of computing power that has been going on since the 50s, 54 the mainframe, 68 the microchip, 82 the personal computer, 96 the internet, 2010 the mobile net, 2024, which is next year, y'all, the truth net. And we are going to replace trust with truth. And blockchains are going to run everything. I am certain of that. And the Bitcoin blockchain is the most powerful supercomputer in the world. It is the most powerful computing network in the world by an order of magnitude of 1,500x. It's 1,500 times more powerful than CERN supercomputer. Owning a piece of that network is the most important thing you can do in this world.
Wow, Patrick, does that convince you? I mean, does that convince you to put more than maybe another 0.5% of your portfolio into crypto? It did a good job on me, and 99% of my portfolio is in crypto.
Listen, 2 nights ago, I'm having dinner in at the Soho House, and these guys are trying to tell me about psychedelics. And for 2.5 hours, it's, Patrick, you haven't lived life until you do DMD, you take psychedelics, you take these drugs. Have you done LSD? I'm like, listen, my entire life I've been around, people that want to convince me what to do. It's on the individual to be able to reason. We all have certain certainties. My way of making money, I'm an operator. So when I'm sitting down with my Goldman Sachs advisor and he says to me, he says, we can put this much money in this BlackRock portfolio and we're going to get 7.2% over the next decade. I'm like, how much? Well, around 7 I said, so you mean to tell me what I put here in 10 years is going to double rule of 72? Yeah, I said, that doesn't excite me. That's too boring for me. And he said the best thing to me. He said, Patrick, all of you will relate to this. He says, there isn't anything you're going to give money to that's going to make a better rate of return than whatever you're personally operating and building. I said, what a great statement. So the moment I understood that concept, for me, I looked at it and I said, say I put 10 million bucks in Bitcoin today. Great. I get it at 22. Let's just say I get it at 23, 22. Fantastic. And say it goes to 100,000 within 24 months. Let's just say it goes 200,000 within 60 months. That's a realistic number. I'm not exaggerating. It could go to 100,000 within the next 2 weeks. I'm just being by the end of next, it goes to 100,000. By the end of 5 years, it goes to $250,000. Great. Whatever that is, it's still not going to give me better rate of return than me taking $10 million and putting into the company that I'm going to build. And we sell that for $600 million and I'm going to get a 50x return. So that's my processing. Don't take it personally. That's just how I'm wired with it. The money my kids' long-term investments to see what it's going to do for them, I wouldn't entertain that conversation a lot more than the other one. But if I can make one comment, I do want to say one thing that I don't think we're paying enough attention to. And I know you guys are, but I don't know a lot of people are paying attention to it out there. Last year, Q1 of 2022, U.S. total savings collectively, we had $2.1 trillion. I'm sure you saw that, Mark. So we had $2.1 trillion. Okay, we're doing pretty good cash-wise.
Yep.
And then a quarter later, we went to 1.9. Q3, we're at 1.6. And that savings is depleting for the average investor. This is all of us collectively together. We got a couple $1 trillion in the bank. Now it's down to 1.3 to 1.5, and it's kind of moving around that number. What does that mean? Well, the average person who was sitting there saying, babe, we're not going to sell this house for $780,000. Put it in the market for $980,000. No one's buying. We're not moving because we got savings. Okay. Their $200,000 went to $180,000 to $160,000. Then all of a sudden it's at $92,000. They're saying, babe, we had $92,000 in savings. Maybe we should sell that thing at $800,000. So I think what we're about to experience the next, specifically, Mark said very good. He says, it's different than if you're a day trader, you're kind of you want volatility versus a buy and hold. You have a different mindset, low and middle income, different mindset, guy that's operated a different mindset. The average investor who's listening to this, if savings depletes, my dad always said, man's identity and confidence changes when he doesn't have savings. He says, always have cash set aside that no one knows about, including me, your wife, your family, anybody. Always have cash. It gives you a certain poise and confidence. He says, if you ever see a man that seems weak, you can tell it by the way he stands. You can tell by their eyes. You can tell by the way they look at you. It's because they don't have a lot of cash right now. Don't ever mess with cash, right? People's cash is going down, which means people are going to do some dumb stuff in the next 6-12 months. And there's going to be a lot of opportunities for people that have cash to buy things on pennies on a dollar That's where I come in. I'm playing that game. I'm not playing the, all the other games. I think there's going to be a lot of opportunities in the next 3, 6, 12 months.
I must say, what you said before this really, really resonated with me. You mentioned about what doesn't excite you as much. What excites you more than just investing in something and making money is actually building something. And I don't know how much you know, but before this, I built one of the biggest marketing company, or the biggest marketing company in Africa, and I sold it. And then I started to invest, and I made a lot of money investing in Bitcoin and crypto.
You sold it for, if I'm not mistaken, 750 or some number like that. It was a very good number.
I sold it for $100 million plus, which in Africa is a big number. But take you forward a couple of steps. I made a couple of really good investments, which made a lot of money. So I took some. I invested $500,000 into a token called Luna, and that went up to, that was worth over $100 million by the end of it. Now, how the story ends is that in a period of 48 or 72 hours, I lost over $100 million on Luna. It's a very highly publicized. It's been on multiple podcasts, etc. It was the worst period in my life, bar none. It's one of the only times in my life where I remember not being able to feel the blood in my face. I'd look at my wife and look at my kids, and I'd look at them like I was a dead man. I was like, I tried to smile, but I just couldn't. It's like, you're dead inside, but your body's alive. And I remember thinking to myself at the time, at what point is my body going to shut down, and am I going to die in my sleep? Because there's just no way that you can suffer so much and nothing happened to you internally. But the reason why I'm telling you the story is because in hindsight, it was probably the best thing that ever happened to me, because I lost sight on building a crypto business because my investment portfolio was making so much money. And when my investment portfolio was making so much money, there was no incentive for me to really build my crypto business, which actually is much more valuable than any money that I've lost. So what I did was I pivoted, and I said, after having a pity party and eventually composing myself again and getting motivated again, I said to myself, the biggest chance that I've got of making that 100 million plus back is to build this business. And I spent 2 weeks fully focused on this business. And within 2 weeks, I think I doubled the value of this business, and this business continues to grow exponentially. And I think why that resonated with me, and maybe this is going to resonate with a whole lot of people here in the audience, is to say, we have an opportunity. You have multiple opportunities. One of the opportunities that you have is you have an opportunity to invest in an industry that we all believe in technology we all believe in. That's one opportunity you have. But we also have an opportunity to build incredible businesses and to build amazing things, because it's the barriers to entry are lower than ever. Not many people know more than us. Not many people, you don't need a lot of money. You don't even need a copywriter anymore, because chatbot can do all your copywriting for you. The barriers to entry of building an amazing business now in this industry are lower than they've ever been. And so I think what resonated with me about what Patrick said is, it's not only about investing in this industry, but it's also about building incredible businesses in this industry. And I know that 𝗏𝗏 and Mark, you guys have been on this train for a long time. You guys have both built businesses. 𝗏𝗏, that's why I felt so bad for you when this whole SBF thing happened, because I think the one thing that, what the market came after you was about how you got swindled by FTX and how dumb are you and how could you have given him so much money. But no one told the story of 𝗏𝗏 and this business that he had spent how many years building?
Well, listen, I'm 35 years in the industry, 18 years of this business, But remember, he gave me the money, So the problem is he hurt my reputation. I took him to meet people that I had 3-decade relationships with. And so I had relationships with people that were older than Sam was on planet Earth that I was taking him to meet. And he betrayed the trust of me and many others by doing that. And it was just ridiculously reckless of him to do that. But you're bringing up something, I just want to address it. We blame the victims in our society. So when we look at the list of Theranos investors, they say, oh, those are all stupid people. Goldman Sachs got hit by that guy in Malaysia. Okay. Oh, they've got to be stupid people. The point being is, if someone's perpetrating a fraud, they can do a number on you. Yep. And you could be an honest person and not see it. He had a pristine data room, pristine. He had pristine venture capital investors. You know, he was a very well-regarded guy. People can pretend otherwise now because of what we know, but he was a very well-regarded guy.
No, look, I mean, to that point, you know, on CNBC, they called him, you know, the JP Morgan of our age. They called him the John D. Rockefeller of our age, the Cornelius Vanderbilt of our age. I mean, hell, they called him they called him Jesus Christ. They called him the Jesus Christ of crypto. That's blasphemy. And down here in North Carolina, they called him the Michael Jordan, right? Even more blasphemous in North Carolina. Like, but I mean, this guy perpetrated a fraud. Same thing with Elizabeth. And, you know, people are like, oh, Tim Draper's an idiot. Tim Draper, literally one of the 5 smartest people I've ever met in my life. I'm privileged to be able to call him, I can't call him a friend, but
I love him.
Business partner, one of the smartest people on this planet. And yeah, he got hoodwinked by Elizabeth, but Elizabeth was a liar. She was a fraud.
You said that this SBF thing was much bigger than we think. You alluded to the fact that he was just the front man, and this is actually
he's a useful idiot. Look up the term "useful idiot" tonight, and you'll understand. He's a useful idiot.
But be more descriptive. So you're saying there were bigger people behind?
I believe, and it's just my belief. I don't, you know, and some of it's rooted in fact. I believe that a much larger group that does not want crypto to survive and thrive. Look, there are too many weird things, right? This company didn't exist 6 years ago, did not exist. And it became the second largest on paper, because it actually wasn't real, second largest crypto exchange in the world. Tell me where the original money came from to start the company. The company was started a week after Biden gets into office. The largest contributor to Biden's campaign was Sam Bankman-Fried. Sam Bankman-Fried's mother is a large Tornado Cash operator. That's not actually Tornado Cash, but basically what she does is the equivalent of Tornado Cash. She scrubs political campaign contributions so the venture capitalists can get around campaign finance laws. That's what she does. The dad, you know, went to Yale with all the, you know, glitterati in DC as an advisor to 3-letter agencies. You know, taught Peter Thiel, gave him the deal on. Right? So and here's the thing: in the old days, if I wanted to bribe somebody, in the old days, yeah, exactly. I mean, I take it down. The black hats are going to show up. So look, I would meet Mooch at the park. And I'd have my backpack and I'd put it on the bench and I'd walk away. And he's like, Mark, you left your backpack. And I'm just keep walking. And he looks in the backpack and it's full of cash. He's like, oh, okay. No way to trace that. No way to trace that. But here's the thing. If the government sends money on chain to the Ukrainian government, who then sends it to FTX, who then sends it to Alameda, who then puts it in a shell company. Here's a stat that is hard to believe. There are 400-ish companies in the Alameda portfolio, 400. 200 of them, let's let that number sink in, 200 of them were shell companies owned solely by SBF.
Wow, this is a huge
definition of money laundering.
So you're basically saying that he wanted to wreck the crypto market by imploding. Okay,
correct.
Did he do that? Did he
no,
wreck the market?
What he did is he set us back, right? It's inevitable that we win.
Didn't. He set us back. He set us back. I think he set us forward. And I'll tell you why I think he set us forward. Okay. We suffered for 2 months. The price 2 months after the FTX collapse is above the FTX price. I'll tell you why he set us forward, because he's put us much closer to getting the regulation that we need to make this industry a bona fide industry. So I think you want to talk about a setback. I know a lot of people lost a lot of money. I know a lot of people still have their money stuck in FTX. But in terms of price, too much. I mean,
no, I'm not talking about price, Rand. What I'm talking about is again, it wasn't Sam. It was not Sam, and it wasn't Caroline. Oh God, it was not Caroline. Whew, not Caroline. Yeah. Caroline's dad was a certain person's boss. that certain person with no experience became the head of a 3-letter agency. Okay. It's interesting. Interesting how that happens. Now, here's the thing. If $1 billion leaves banks and goes into crypto, no one cares. I describe it like this. 2009 to 15 was the first they ignore you phase. Right? Bunch of nerds and geeks playing with their magic internet money. Who gives a shit? No care. Then they laugh at you. 2016 to 21. God, look at those nerds and geeks playing with their magic internet money. A bunch of idiots. 2022 to 27. Then they fight you. Now, the cool thing is the last part of that is then you win. But I will argue we've already won. If you're here, if you're in crypto, you've already won because it's so inevitable that everything in the world will run on blockchains and it will be the power. We will all be self-sovereign and we will all, but the banks, $1 billion leaves, they don't care. $10 billion leaves, they don't care. $50 billion leaves, they care. Where's it going? Celsius, Voyager, BlockFi. Who did they attack? Celsius, Voyager, BlockFi. Now you can say Celsius idiots because they had the token. Okay, Voyager idiots because they had the token. BlockFi had no token, by the way. Then you have, FTX token.
Mark, I do want to pick this up. I think we should have a separate show and we should discuss the FTX debacle. I do know that Patrick is on a very, very, very tight schedule. So this is probably a good place to cut it for today. Guys, I'm going to thank you, Patrick. Welcome to the Banter fam. Much love from all of us. Mooch, Mark, you guys are regulars, but much love. Nice to see you guys again, and we'll see you guys again soon. To the Banter fam, while I'm letting the guys go, hold on. Let's just, guys, thank you very, very much.
Well, thanks for having us.
So that the guy, sorry guys, but they all had to go. They all had very, very tight commitments. All right, let's talk about some housekeeping rules. First of all, let's go to the markets and let's just see where we're at. So we've got Bitcoin at 23,000. Let's quickly look at the bubbles to see if anything's happening on the markets right now. I did see a theta pump earlier, and I just want to show you something. Remember yesterday we spoke about the root of all pumps. So I saw theta had a huge pump earlier. It came down a little bit today. Where did the pump come from? Korea. Just stick to the rules. We spoke about this yesterday. Just stick to the rules. All right, Josh, how are we doing on the likes? How many? 1,500 likes. Okay, listen. What we're going to do is we are going to give you guys 1 minute. Let's go. You guys have got 1 minute to get to 2,000 likes. Let me just get a stopwatch here. All right, the stopwatch has started. Let's check the likes. If we get to 2,000 likes, we give away the Rolex again. Well, we try and give away the Rolex if the winner is there. There we go. You can see me. 1,600 likes. You guys have got. Let's go. What is that? Okay, how many you got? You got 30 seconds. 30 seconds to get 300 likes. Are we going to get to 300 likes? If yes, we give away the Rolex. 2. Ooh, we got 2. Now it's getting juicy. Now it's getting super juicy. It's getting super juicy now. Super juicy. Okay, we have. What do we have? We have 15 seconds and we have 100 likes. 1.9. Come on, can we do this? 7, 6, 5, 4, 3, 2, 1. We still got 1,900 likes. I guess we have to go again on Monday. I'll see you guys again on Monday. Until then, if you've loved this show, smash up a like, subscribe to our channel. Oh, we got 2,000. Wow, man. Okay, you know what? It was after the cutoff time, but I guess in the interest of fun and being part of the Banter fam, we are going to give away the Rolex. Or we're going to try and give away the Rolex. Before I give away the Rolex, I just want to remind you again that this show is brought to you by NordVPN. They are our sponsors. They are the best crypto VPN in the world. Guys, if you're surfing crypto without a VPN, you're on a suicide mission. It's like driving. I want to say driving without a seatbelt, but it's not even crazy enough. It's like driving out a racetrack without a seatbelt. Because you're giving away your IP address. And if you're giving away your IP address, you're giving away too much information about yourself, including where you live. Just go and get yourselves a VPN. There's a referral link below under the show. Here it is. Click it. Pay $4 a month. If you're serious about your crypto, do that. All right, let's go. Let's do the Rolex watch very quickly. So let me just see what the numbers are here. So we're going to do a random number generator. You got 5 hours after. You got 5 hours after the show to mail us at giveaways@cryptobanter.com and tell us that you're the winner. Let's select the winner, 6437. All right, here's a random number generator. 1 to 6437. Let's pick a number, 6437. Let's generate that number, 2783. And the watch is a black Rolex Submariner for row number 2783 on the spreadsheet. Let's quickly go to row 2783 and give away a Rolex. You got 5 hours from 2783. So account number on ByBit, account number 271500739. If you get back to us in the next 5 hours, the Rolex Black Face Submariner is yours. You got 5 hours from now. And remember, if you want to enter this competition, open an exchange account using a Crypto Banter referral link. Any exchange account, any Crypto Banter referral link gets you in. Every trade you make is one entry, and we're going to give away 2 more Rolexes before the end of the month. See you guys again on Monday. Until then, have fun, trade well, my friends.